All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Wednesday, everybody. Today is November 6th, 2024. And you guys may have noticed there was this thing that happened yesterday, and then there was a result, and now people are emotional about it. And that's the end of the story, right? That's it. Okay. Presidential election. All right. It's a topic that I am so happy it is finally behind us. Good God, you guys have no idea how many text messages I got from unknown numbers yesterday, being in the swing state of Pennsylvania, which is ultimately what delivered the race for Donald Trump yesterday. All right, Donald Trump will be president again. He has won his second non-continuous term as president of the United States, defeating Vice President Kamala Harris. All right, Trump flipped the states of Pennsylvania and Georgia. That is pretty much what put the race over the edge for Trump in the Electoral College. Several states are still undeclared. They're still counting votes all over the place. So we don't have the final tally of everything. But what we do know is that the Republicans have taken the White House. Trump will be president. Republicans also have flipped 3 Senate seats so far. They flipped seats in West Virginia, Ohio, and Montana. So Republicans will control the Senate. That is 2 out of the 3 big ones. The House is still up in the air. There is still a lot of races that have not been called in the House of Representatives. And the Republicans right now have a very narrow majority in the House. So that's a big one. That's still a very big asterisk that's attached to this election right now, because one of the first things Trump is going to have to deal with when he takes office is going to be the debt ceiling again. Oh, that thing. Remember the debt ceiling every few years, where if there's a Democrat in power, Republicans pretend to give a shit about federal government spending. And then, of course, they conveniently tend to forget that if there's a Republican president in power. Well, that's going to be the first thing Trump and his new Congress have to tackle. So the further developments in the House race from here that will happen, some of these races probably won't be called till the end of the week. That's going to have a big impact on how that debt ceiling debate goes. Just a reminder, Republicans, you talk a big game. Maybe you want to think about maybe eventually, cautiously, optimistically considering maybe cutting spending someday. I just throw them out there. You guys, it's balls in your court now. You got the ball. So there's no more saying, hey, the other guy sucks so much. It's on you to do it now. So, hey, Republicans, you're up. Good luck, and may the odds be ever in your favor. So that's how the results went. Now, guys, the market is all over the place this morning. Everything is moving big. Let's just go through like high level stocks way up. Bitcoin going berserk this morning, higher. Interest rates, the 10-year yield sharply higher this morning. Keep an eye on that. That could derail this rally. We've also got the DXY sharply higher this morning. Gold is lower. Oil is lower. Any way you look at this, guys, it is risk on in the market right now. The market appears to be liking this news. I don't know if it's so much the market is happy that Donald Trump is going to be president, or is the market just delighted that we have a winner? And thank God we're not like shooting at each other right now. Maybe that's why the market is rallying, because there was that risk of, oh my God, do we have another January 6th, or do we have a race that's not called and the infighting and the bickering starts, and the market likes certainty more than anything? Well, the market got certainty last night, so maybe that's why this rally. Now, look, guys, there's a lot we could talk about this, and we're going to talk about some of the specific sectors in the market movements that are happening right now and what the rationale is. This is a double-edged sword, all right? There's probably a couple of people dunking, a couple of people are happy with the result right now. Temper that enthusiasm, because your guy is in charge now. And in my opinion, there's something pretty nasty just over the horizon, economically speaking. And when your guy's in power, when that hits, you get the blame for it. Your guy gets the blame for it. So, if you're happy with the result right now, don't go crazy, because that means now you got to govern. And, winning an election and governing and ruling, they are 2 totally different things. All right. Trump has proven halfway decent at winning elections. Now he's got to govern. You got to put the phone down. You got to stop tweeting, and you got to actually do the job. Didn't go so well the last time. There were things I liked the last time, but it was mostly just a sideshow, distractions, because, oh my God, did you hear what he said about Rosie O'Donnell? Who cares what he says about Rosie O'Donnell? What policy is coming? And look, a lot of promises were made on the campaign trail, things like no tax on tips. Really, you're going to implement that policy now? So there's a lot that remains to be seen here. Now, some of these other things, like I noticed a very substantial change almost instantly last night. I was watching CNN, as I sometimes but rarely do. I was watching CNN, and one of the panelists, as she was gloating and rethinking her life because, oh my God, it was like somebody died on CNN last night. She said Kamala Harris could not outrun this economy. She could not outrun the Biden economy. And when they were trying to explain Kamala's loss. And right away, I was like, aha, there it is. Instantly. The results weren't even in yet. They hadn't called Pennsylvania yet. They had just called North Carolina. It was still very early in the race. But already, the mainstream press is wiping the lipstick off of that economic pig when they said, after telling us for years it's the best economy ever, what's wrong with you plebs? You don't understand how good you have it. You had a panelist on CNN say Kamala could not outrun the Biden economy. Already the press is starting to tell the truth again. Welcome back, journalists. Hey, I would just like to give a big shout out and a big welcome this morning to all the journalists of the world who are going to once again start doing their job, speaking truth to power and asking hard-hitting questions. Yay, journalists. Welcome back. I hope you guys had a nice nap. Thank you in advance for doing your job again. But the point is, guys, all the things that we have done to pretend the economy is doing well, all the things Janet Yellen has done to shore up liquidity in the bond market, all the things central bankers have been doing to hide what is really going on beneath the surface, they're going to stop doing that now. The press is going to stop talking like it isn't happening now. And what's the result going to be? I don't know. So this euphoria that's going on in the markets right now will eventually wear off. And then we're going to be left to deal with the reality of the economy that we've got and the inevitable return of Zerpenber. The question is, how bad do things get before that happens? And guys, look, we got an FOMC that's starting up any second now, right? Is today the day of Powell's press conference? Is that today or is that tomorrow? I think that's tomorrow. I got to look on the calendar. Yeah, the Fed press conference is tomorrow. You think I'd know that? We'll look for any shifts. Are they going to pivot hawkish instantly tomorrow? I don't know. But all of this extend and pretend and all of this lipstick on the pig thing, that's about to go away. And we're gonna be left with the economic turd that we've all been living with. So again, this euphoria, maybe you want to temper that. Let's actually let the dust settle here. Also, we got some other things going on this morning. Tesla's ripping higher, obviously, Elon's favors. Supermicro reported earnings yesterday, and, well, who cares because they're liars and crooks, so who cares what they report? They're calling them preliminary business results because they can't even call them audited financials. Oh, that's right, because they don't have an auditor. The auditor quit because they're liars and crooks. So who cares what they report, honestly, but the stock is down about 17% anyway because they forecast weak guidance. That's the first drip, guys, this AI bubble. That's another thing that the next president is going to have to deal with, in my opinion, the inevitable bursting of the AI bubble. He's going to get the blame for that one, too. We got Toyota reported results, big drop, 20% drop in operating profits for Toyota. Oh, that's something else that the next guy in power is going to get the blame for. An auto market that is in free fall. And last but not least, we had CVS reported mixed results, and they pulled their guidance for the year. That's interesting, or they didn't make any forecasts. The new CEO at CVS is taking a very cautious approach after several times CVS has had to lower their guidance in the last couple of months. The market is actually liking it. The insurance business, though, is really hurting CVS as they are spending more money on procedures than they are taking in the form of premiums. And, well, does that mean higher insurance premiums are coming? Probably. Well, there's that inflation bug that we have to worry about as well. Guys, we got a lot going on this morning, a lot to get to. A lot is up in the air. Let's shrink my big melon of a head. And if you feel so inclined, could you hit that like button for the YouTube algorithm? It really helps me out. And if you're new here, hit that subscribe button and come have your coffee with the melon heads because we do this every morning. Right now, the S&P 500, though, we've got euphoria in stocks up 2%, 118 points higher. Big move higher this morning for stocks. Risk on. Dow, same thing. Look at this move in the Dow, up 1,200 points, 1,217 points higher, almost 3% higher for the Dow. Again, guys, risk on. The NASDAQ, no different, 1.6% higher, 326 points to the upside before the opening bell. Risk on. Now, let's look at the DXY. This is interesting to see. A significant strengthening in the dollar. 1.79 points higher. I mean, 179 basis point move in the dollar. This thing is ripping here back above 105. Now, to really appreciate what's going on with the dollar here, you got to look at this chart. Now we're looking at daily candles for the Dixie. This is going all the way back to the start of the year. Look at this move in the U.S. dollar. Guys, if you want to weigh in the comments, what is going on here? I'll be honest with you. I think this move in the dollars probably got more to do with liquidity in the bond market here. Dollars are in a little bit of short supply here. We're seeing interest rates move higher. We're seeing the dollar move higher. So I'm pretty sure that's what's going on. But a sharply stronger dollar should be putting downward pressure on asset prices. Well, we're obviously not seeing that. We just went through stocks. The Dow's up by 1,200 points. So this one could potentially put a damper on this rally a little bit. Big move in the dollar. Also, guys, just a reminder, remember that whole Japan thing that was going on? Remember the yen carry trade? Check out the move in the yen. Big move in the yen. This is the biggest move we've seen since the Japanese central bank pretty much came out at the beginning of October, end of September, and said, don't worry, we're not going to mess with markets while things are volatile. Look at the big move in the yen, 154.3, up 2.7 yen to the dollar here. So the Japanese yen is weakening significantly here. We've got an FOMC press conference later on this week. BOJ, your move. BOJ didn't want to do anything until the U.S. election was behind them. They didn't want to do anything while markets were unstable. Well, markets are stable or at least rocketing higher now. So what does the BOJ do here? Are they going to let the yen continue to collapse in value? This is a pretty rapid depreciation we're seeing here. Or will they intervene once again? And remember, it was the intervention that led to this massive rally in the yen that culminated in that August 5th bloodbath in stocks. So keep an eye on the Japanese yen as well. Now let's look at the bond market. Big move in interest rates here on the long end of the curve. This is one to watch out for here, guys. The 30-year Treasury, 4.654, 20 basis points higher on the 30-year Treasury. The 10-year Treasury, another big move, 4.463. That's up 17 points this morning. The 2-year, 4.280, up 7.5, almost 8 points. And the 1 month is basically flat here at 4.616. So we've got interest rates moving higher. That's bond prices moving lower. People are selling bonds, buying stocks. That is risk on behavior. Remember, guys, sharply higher interest rates, not exactly good for this economy. And once again, you got to look at this long-term chart to really appreciate it. We have got a big green candle in the dailies here for U.S. interest rates. This is an even bigger move than the move we got on October 4th when we had that blowout September jobs report that was reported. Remember the 254,000 jobs added that nobody believed, and then, big downward revision, surprise, surprise, right before the election. Even bigger move in the 10-year yield here this morning. So, guys, those higher interest rates, that's your housing market, that's your auto financing costs. Remember, September 18th, was it? The Fed lowered interest rates. Interest rates still haven't figured out that they're going lower yet, because that's when interest rates were lowered. That's not how that's supposed to work. Also, looking over at the commodities board here, we actually got a lot of red in commodities here. Spot gold down $73 here, below $2,700 an ounce at $2,670. That's down 2.7%. Gold heading lower. That is risk on. Gold is a safe haven asset. People are selling that, and they're buying stocks here. Spot silver is also down big here, $1.52 lower, 4.6% negative for silver here, $31.13. For my favorite of the shinies, we've got copper down 4.6%, platinum down 2.5%, palladium down 3.25%, and crude oil. This is interesting to see. WTI crude down $1.66 here, 2.3% lower. WTI futures at $70.34. They were below $70 at one point this morning. So what happens with oil here? Everybody's like, oh, Trump's presidency, this is great for oil. Well, great for oil, you need to really think about what that means. Are we talking oil, the commodity, or oil stocks? Because right now oil is sharply lower because, Trump is a deregulation kind of candidate. So that probably means more American oil production. All right, more American oil production. Well, that floods the market with more crude, which means oil prices go lower. And lower oil prices is not good for oil stocks. So if people are out there buying an ExxonMobil or a Chevron this morning on this news, I'm not sure you guys have quite thought this one out here, because lower oil prices is not good for those stocks. And we also have to factor in, what will OPEC do here? What's Saudi Arabia going to do? If we've got a president who is going to deregulate in the United States and get the EPA and all those, three-letter agencies out of the way of domestic energy production, well, the Saudis are expected to start increasing production here soon. They just delayed that. Will the Saudis increase oil production at a time when the United States is increasing its oil production? Well, that would send oil prices sharply negative. And also keep in mind, if the Saudis do decide to do that, they'd be basically declaring war on United States oil producers, which is what they did in 2015. And there was a lot of consequences for the economy. But that also means the Saudis would be dipping into their reserves in order to make ends meet, as oil income would be cut significantly from that. Well, what did the Saudis store most of their wealth in? U.S. Treasuries. So if the Saudis were to start liquidating U.S. Treasuries to make up for the cash shortfall that lower oil prices is causing, well, that could add liquidity stress to the bond market. So that's another thing that the market needs to take time to digest, what this really means for everything going on out there. Bitcoin surges to 75,000, a record, as Trump victory heralds wider crypto adoption and weaker regulation. I mean, that's basically the gist of it right there, guys. We don't even need to get into this article right now. Bitcoin had a rip your face off rally yesterday, as it was looking increasingly likely that Trump was going to win. Bitcoin was rallying by the minute as Trump was doing well in the polls. You can see it here now. We're back below 75,000, even back below 74. So some of the enthusiasm is starting to wear off here a little bit, maybe some profit taking, but Bitcoin still, as priced on Coinbase, up $4,400, 6.5% higher versus yesterday. A new all-time high for Bitcoin. Congratulations to Bitcoin hodlers, and also the bank stocks, guys, doing really well here this morning. Bank stocks soar as Trump victory is expected to lead to a looser regulatory backdrop. This one, I was looking at some of the bank stocks. They are doing really well here this morning. Let's get rid of this pop-up. U.S. banks soared on Wednesday to lead the S&P 500 gainers after former President Trump won a sweeping victory in the U.S. presidential election and was expected to create a less stringent regulatory regime. By the way, keep an eye on those private credit outfits. They have been the big beneficiaries of the more stringent regulatory regime. So if that's going away, watch out for those PIMCOs, those Brookfields, those, who's another big one? Blackstone. Be careful there, because they have piled into private credit. Well, if the banks are now going to be having looser capital requirements put on them, that business is going to go away for those private equity firms. Banks have been pushing all year to loosen capital requirements. They're also expected to benefit from potential tax cuts, as well as the market rally that set in after Trump was declared the winner, with stock futures rallying, the dollar surging, and Treasury yields jumping. Markets seem to have accepted that another Trump term would mean a supportive and expansionary fiscal policy. Supportive and expansionary fiscal policy also means a liquidity crisis is more likely. Again, I don't think the market has quite thought this one out here, but this could positively impact growth in the U.S., said Danielle Sabine Horthen, senior market analyst at Capital.com. This is evident in the bullish reaction in equities, especially those largely influenced by the domestic economy. And let's look at some of these bank stocks. First of all, look at Wells Fargo, up 11.4% ahead of the open here. That one is ripping higher. How about a JP Morgan this morning? JP Morgan up 5.7%. Let's look at Bank of America. That's another big bank. BAC, they are up 6%. So you can see, guys, bank stocks are loving this decision. Is it the Trump presidency, or is it just the certainty that we have a winner? Again, that's up for debate. But banks appear to be benefiting from the prospects for a lower regulatory regime. Also, let's talk another one. Big cap. This was kind of interesting in Market Watch. What the Trump win means for mega cap tech giants, according to this high-profile analyst. I was pretty surprised to see these guys are actually saying this is bullish for big tech. Donald Trump, not really a big ally of a Google or a Meta. They haven't always been simpatico, to put it mildly. Futures early Wednesday indicate the S&P 500 will be eyeing another record high as investors welcome Donald Trump retaking the White House. Much has been made of the so-called Trump trade in the run-up to the election, and sure enough, many of the assets expected to be notably impacted by the new Republican regime have started to move overnight. But more broadly, a Trump administration should be a good for a sector that has driven a large portion of the market gains in the last few big years: big technology. That's according to Wedbush analyst Dan Ives, whose bullish proclamations in favor of tech stocks, it should be said, do tend to be as regular and loud as his infamous attire. So this is one of those guys who's bullish big tech no matter what. But first, there's AI. Ives says that market should expect significant AI initiatives from the Beltway within the U.S. that would be a benefit for Microsoft, Amazon, Google, and other tech players. Department of Defense AI initiatives would also benefit the likes of Palantir, he adds. However, Ives also thinks that Trump would make major revisions to President Biden's Inflation Reduction Act, which could negatively impact the act's beneficiaries, such as Intel. The next issue is regulation, and I think this is probably why there's a little bit of optimism in big tech here. Ives says that the biggest thorn in the side of big tech for a while has been the head of the Federal Trade Commission, Lina Khan, who has challenged deals of all shapes and sizes in the sector. Trump's running mate, J.D. Vance, surprised some supporters in the business community when he said in September that he favored Khan's robust regulation of tech companies, in particular supporting her approach to breaking up big tech monopolies. But Ives reckons that with Elon Musk's influence, the new president will remove Khan. While antitrust issues remain with the DOJ versus Google, as well as Apple, Khan potentially out at the FTC would be a huge positive for big tech, he says. So that's interesting to think. Trump and big tech, not exactly the best of friends there, but Lina Khan has been a thorn in the side of big tech companies. So getting rid of her, apparently the market is just blindly optimistic right now. They're really liking this prospect. Now, Tesla, this is another one. Like, speaking of big tech, Tesla soars as Musk's bet on Trump is seen as reaping rewards. This is another one of those where I'm like, I'm not sure the market has really thought this one out yet. But let's see what they're saying here. Tesla shares climbed as much as 15% in early trading as investors wager the car maker run by Elon Musk will be a major beneficiary of Donald Trump's return to the White House. The Tesla CEO was arguably the most prominent supporter of Republicans this election cycle, backing them with more than $130 million in spending and relentless messaging on X, his social media network. While Trump criticized electric vehicles throughout his campaign, he softened his tone somewhat after Musk's endorsement. Now, there's some important things here. Multiple EV-related provisions could now be targets for repeal, especially if Republicans take both houses of Congress. So Republicans, again, we know they've got the Senate. We don't know if they've got the House yet. But fuel economy and emissions requirements are likely to undergo rewrites as they did during Trump's first term, which could limit the revenue Tesla generates from selling regulatory credits, i.e. carbon credits, to manufacturers to comply with Biden's tougher rules. Remember, guys, those regulatory credits were solely responsible for Tesla's big earnings beat that they reported was that last week or 2 weeks ago? So Trump's not really going to be driving that point home. Now, Musk has downplayed the threat of any pullback in government incentives for EVs while emphasizing the potential for companies to benefit from deregulation. During Tesla's quarterly earnings call last month, he called for a federal approval process for autonomous vehicles and said he would try to make that happen if tapped for a role in Trump's administration. Under current regulations, automakers must get permission from the National Highway Traffic Safety Administration before putting cars on the road that lack a steering wheel or other controls required by U.S. auto safety standards. If Tesla were to secure such an exemption, it could only put a few thousand such cars on the road per year. The autonomous fast tracking will be front and center for investors, Wedbush's Ives wrote, speculating that Tesla may be able to accelerate plans to put self-driving vehicles on the road. So Tesla winning, obviously, Trump owes Musk favors here. Tesla shareholders expect to benefit. Look at this stock, up 13% here this morning, trading at $284. The big question, though, will Tesla benefit more from deregulation and fast tracking of driverless cars, or will the rollback of EV mandates and carbon credit requirements, will that hurt Tesla's business? Right now, the market is blindly optimistic here. I'm not so sure the market has really thought this one over, but Tesla shareholders, congratulations. Now, another issue going on in the car market this morning, because this is one of the messes that Donald Trump is going to inherit here, guys. An auto market that is in steep decline. Look no further than this one. Toyota posts nearly 20% drop and second quarter operating profit missing estimates. Japanese automaker Toyota Motor on Wednesday reported its first quarterly operating profit drop in about 2 years as it strives to navigate the market shift toward electric vehicles. The world's largest automaker by sales volume saw a 20% year-on-year drop in operating profit during the year. Net profit attributable to the company more than halved to 573.7 billion yen from 1.28 trillion yen a year ago. That is a huge reduction in profits for Toyota. And also the automaker's sales volume for the second quarter slipped to 2.3 million cars. That's down from 2.42 million units a year ago. So that is the state, like car prices just unaffordable. Interest rates are so high, that 1-2 combination of higher prices and higher interest rates has a auto market that's frozen in place. The same thing that's going on in the housing market. And I don't know if you guys saw this morning, but interest rates are rocking higher this morning. So the problems in the auto market are not going to get better with higher interest rates, that's for sure. Toyota's profit taking quite a beating, but you know what? The stock doesn't seem to care this morning. They just posted a 20% reduction in operating profit, and the stock is up 7 cents, $174.80 here, basically unchanged on the morning. So Toyota shareholders, I guess, were expecting a lot of this negativity, but auto sector is not doing so well. Now let's talk about the AI bubble, another mess that Trump is going to have to deal with in this term. Supermicro slumps as weak forecast and annual report uncertainty fuel investor worries. Shares of Supermicro Computer tumbled more than 20% in pre-market trading on Wednesday as an unclear timeline for its annual report, along with weak quarterly forecast, fanned investor worries about the AI server maker. Look, guys, we've talked a lot about how the short seller report, shout out to my buddy, the OrcaFin, who started that ball rolling, and then Hindenburg Research drove a lot of enthusiasm for it and, shined a big light on what the OrcaFin had found. That stock has been selling off like crazy. They delayed their 10K because their auditor wouldn't sign off on their books after that short report. Then their auditor quit and basically said, this management team is a bunch of scumbags. We're not putting our reputation on the line for them, using some very strong language. And now the company is reporting preliminary business results because they're not audited financials because, well, you ain't got no auditor, Lieutenant Dan. The company also forecast second quarter sales and profit below Wall Street expectations on Tuesday. What happened to that insane demand, that wild growth story, the 2,000% year-to-date return? Oh, crap. There you go. A weak forecast from Supermicro and accounting fraud. Nobody saw this coming. Look, guys, as it awaits the latest chips from NVIDIA to be delivered, there's already rumors that NVIDIA is not sending the chips to Supermicro now, that they're diverting them to Dell and other customers because, well, you don't want to have too much of your business tied up with Supermicro. And by the way, how much of that accounts receivable? NVIDIA has, something like $14 billion in accounts receivable on their books right now. How much of that is money that's owed to them by Supermicro that hasn't been paid for yet? And will Supermicro be able to pay for that? I don't know. That's a question that maybe an inquisitive press might start asking when the next time they're fawning over Jensen Huang, like CNBC. Remember all the anchors on Morning Brew or whatever, or Squawk on the Street, how they were all giggling like schoolgirls when Jensen Huang wandered onto the stage in the middle of their show. And Becky's like, oh, take my microphone, Jensen. Please get closer to me. Oh, my, you smell nice. Maybe ask him questions like, hey, is your company doing widespread accounting fraud again? Because, they've done fraud twice before, in 2018 and 2003, and they had to settle with the SEC both times. But hey, I'm just asking, don't shoot the messenger. By the way, the angry piece of fruit that was threatening me in my DMs on Twitter the other day, he's been piling into this stock lately, buying options and share prices. So I call that the Vietnam was a Thai trade. People who are buying Supermicro on accounting irregularities. Good luck with that one. If you're going to talk shit, don't buy companies with accounting issues. That's all I'm going to say. Supermicro stock down another 21% here. The opening bell has rung. $21.75. Look at the ride on Supermicro, guys. Started the year at $29, split adjusted, ran as high as $114. Now we're back to $21. It's been a pretty wild ride. All right, last one of the day. CVS posts mixed results, hold off on guidance in Joyner's first earnings report as CEO. Soaring medical costs is another thing Trump is going to have to deal with, guys. CVS just reported here. Let's get into this one. CVS on Wednesday reported mixed third quarter results as higher medical costs squeezed its bottom line. The earnings report is CEO David Joyner's first at the helm of the troubled retail drugstore chain. The company expects elevated medical costs to continue to pressure its performance this year. And as a result, we are not providing a formal outlook at this time, the spokesman told CNBC. Establishing credibility and earning the trust of our investors is one of my top priorities as the new leader of CVS Health, Joyner said in a statement. To achieve that, any guidance we provide should be achievable with clear opportunities for outperformance. This is a core principle for me. Wall Street's confidence in CVS has soured this year after 3 straight quarters of full-year guidance cuts, prompting pressure from an activist investor to turn the business around. So the market is kind of loving that news here. Also, by the way, let's see, they're replacing their prior CEO. CVS reported sales of $95 billion. That's up 6.3% from the same period a year ago. So sales are up, but look at the net income here. The company posted net income of $71 million or 7 cents a share for the third quarter. That's compared with net income of $2.27 billion or $1.75 a share for a year ago. So CVS earnings have been just decimated by all the people who didn't get medical procedures done during COVID. Now they're all scrambling to get them done at the same time. CVS and their insurance unit is having to pay for all those procedures, and the cost of that is way outpacing the rate they're taking in money in the form of premiums. And so that tells me premiums are probably going to start going up here, a function of the aging population. Although the market is really liking that the fact that they didn't issue the guidance and that this new CEO is being very cautious here. Again, the market likes certainty. So CVS stock is up about 13% here, $62.37. That's up about $7 here. So CVS is doing all right this morning. And all right, I said last one, but I lied. Mortgage applications came out today, guys. 2 big ones here in mortgages. First things first, the 30-year mortgage rate jumped again, 6.81% for the week ending November 1st, guys. That is up from 6.73% in the previous week. So interest rates continuing to rise, and this doesn't even factor in this huge spike in the 10-year that we're getting right now. So interest rates keep rising. They've done nothing but rise ever since interest rates started going down. They've done nothing but go up. So the housing market remains frozen in place. These higher rates are not going to help. And you can see it here in the mortgage application data. Mortgage applications in the U.S. sank by 10.8% from the previous week, ending on November 1st. That is the 6th consecutive decline. Every week since they cut rates, mortgage applications have gone down because interest rates have only risen. Applications for a loan to refinance a mortgage, which are sensitive to short-term changes in interest rates, sank by 18.5%. In the meantime, applications for a mortgage to buy a new home fell by 5%. So we have got 6 consecutive negative candles here, a big drop here in mortgage rates, guys. And just one thing to keep an eye on, guys, is the Fed. We've talked about this for a while here, right? The Fed is in dovish mode right now. We've got 25 basis points is seen as the majority. There's an outside chance of a 50 basis point cut. But pay attention to the rhetoric coming from Jerome Powell at tomorrow's press conference. Will there be a hawkish pivot? Pay attention to the rhetoric from the press. Now that there's no Kamala, no Joe to defend, will they start honestly reporting on the state of the economy, especially now that, in my opinion, because they hate Orange Man so much, that they actually are incentivized to portray the economy in a more negative light? We've already seen that with that CNN host talking about how Kamala could not outrun the Biden economy. All right, the greatest ever Biden economy. Why do we need to outrun the greatest ever economy? The second it became clear that Kamala was not going to win, they started covering the economy in a negative light. Watch for that change in the days ahead. And I just want to say thank you so much to Charles G., who says Trump 2024, woohoo. Congratulations, Charles. Your guy won. Look, guys, you can probably guess how I vote and, where I went and how I wanted this to go. There are only losers in this election, in my opinion, though, because yes, Trump won. Your guy is in office, but that means your guy now has to govern, and your guy gets the blame for what's coming. We've got a commercial real estate bubble. We've got an emerging liquidity crisis in the bond market. We've got a banking sector that's still on the ropes. We've got an AI bubble horizon. There are plenty of landmines for this new president to step on. He's going to have to govern. All right. Winning the race is one thing. What do you do when you get there? And the first of the big landmines he's going to have to deal with is that debt ceiling. Keep Republicans honest, guys. They need to be held to account. They've always talked about lower spending. Our fiscal house is a mess. This is the time to cut spending, especially if you've got both houses of Congress. But, cutting spending might not be good for my stock market. Remember, Trump, he's an easy money guy. He's a money printer. Zerp and Burr went crazy under Trump. And look at my stock market. It's up so much, even though inflation became a thing under him. So Trump is not innocent in the economy that we've got right now. He is partially to blame. He is not solely to blame, but he is partially to blame. And in my opinion, Trump is going to be every bit as much Zerp and Burr as Biden was, as Kamala would be. He might spend it on something different, but I do think easy money is the big problem. And right now, easy money is not going anywhere. Thank you, Charles G., for the super chat. And thank you, Mr. Schwa, who says 60 plus days of Biden left and inflation still has tarmac to run rampant. 2025 has lots of work to do. SPR, fiscal cliff, border, jobs market improvement, oy vey. Mr. Schwab, that's kind of like my sentiment. Like, okay, he's in there. Now what? Now you got to deal with this stuff. And don't expect the press to be holding your hand and saying good job along the way. The press is going to be like going over everything with a fine-tooth comb that he does and saying, oh my God, he screwed this up and he's doing this and this could go wrong and this could go wrong and this could go wrong. So you've already seen that pivot in the press. They're shifting back to negative coverage as we speak. So it's going to be 2025 is going to be an interesting year, to say the least. Thank you, Mr. Schwab, for supporting the channel. By the way, President Biden, good luck in your last 60 days in office. If you do feel compelled to leave an upper decker in the presidential bathroom for the next guy that's coming in behind you, just have Dr. Jill act as a spotter. I'd hate to see you break your hip in your last few days in office. So just be careful. Okay. Thanks again, Mr. Schwa. And the Vitruvian boy, thank you, sir. The Vitruvian. Do you hail from the land of Vitruve? I don't know what Vitruvian means, but thank you, Vitruvian boy, who says yield curve 10-year 3-month is about to uninvert. All right, let's look at the yield curve real quick while we're at it. Well, not the curve, but let's look at what the numbers are. The 10 and the 3, was that what the comment was? Yeah, the 10 and the 3. We've got the 10 at 4.473 and the 3 at 4.55. Not quite yet, but yeah, I see it there. We're under 10 basis points. Also, guys, the 10 has retaken the 1 year and the 10 has retaken the 6 month. Not quite the 4 month yet, but the yield curve uninversion continues. And remember, guys, it's when the yield curve uninverts shortly after that things usually get interesting. And by interesting, I mean awful. So thank you very much to Mr. Vitruvian for pointing that one out and for supporting the channel. I appreciate that very much. And Chuck G is back again. Thank you, Charles. He says, it never occurred to me that low oil prices could affect treasuries in that way. Wow. It does if prices get so low that Saudi Arabia starts to operate at a deficit. If Saudi Arabia goes into a deficit, Saudi Arabia's got to start liquidating some of their holdings. And Saudi Arabia holds a lot of U.S. treasuries. So if it turns into another oil price war, we could see the Saudis liquidating their UST holdings in order to, get the money that they need to make ends meet. Now, that would make things even worse for U.S. oil producers, because remember, when oil prices go negative, not negative, but when they go lower, U.S. oil typically has a higher cost to produce than, say, Saudi oil does, which means U.S. oil producers will turn to the bond market. They'll start borrowing in order to stay afloat while they're losing money. Well, if the Saudis are selling U.S. treasuries, that's driving interest rates higher, which means it gets harder for U.S. oil companies to borrow in order to fund cash-burning operations. And that's why I think maybe some of this enthusiasm around oil, keep in mind, guys, oil, the commodity, and oil stocks, not necessarily the same thing. Lower oil prices is not good for the oil majors. And what did the Saudis do? That's another one of those big minefields here. That's another one of those big what ifs, and we don't know yet. And the next guy, he's going to have to respond to that. So thank you, Charles G., again for the super chat and the support of the channel. And thank you, everybody, for sticking around through this long show today. I know it was a long one, but there's a lot happening in the world. So, look, everything's up in the air. Everything is swinging. Don't chase. Let's let the dust settle. This is just what my plan is. Thank you so much, guys, for the super chats and the support. Thank you to my magnanimous Melonhead members on Patreon and YouTube. Looking forward to talking to you guys at 4 p.m. Eastern time today for our weekly get-together on Zoom. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.